What a day! What a day! God, it's all going off. Everyone, welcome to the Crypto Blast with myself and Cam from Institutional Fi. As usual, Cam will be giving us the rundown on the latest pricing flows and market moving news in crypto markets. But remember, it's crypto with a suit and tie on, not your meme coins, your pink penguins and whatnot. But before we crack on, first the legals. Nothing discussed on the Spaces session constitute trading or investment advice or infers any kind of endorsement by me, Cam, PIQ, or Institutional Fi. And also, quite exciting, this will be hopefully the last one we do on air quotes Spaces, because quite frankly, Spaces are getting worse and worse. And because the vast majority of people play this back and listen to this after the live recording, it's kind of what's the point in doing it on Spaces then? And yes, we're going to be doing it on Podbean or whatever it's called. We tried today; it kind of went okay. What it means to people on Twitter is nothing. We're still going to send a link out so you can listen to it live, etc., etc. It just means that it's far more easier for us to ping it out to all your favourite podcast players. But that's enough of me rambling away. Cam, how the devil are you?
I'm very well, Ryan. How are you doing?
I'll be honest. It's been an absolute manic day today, and I've not even. Do you know what? It's
Oof.
been very, very manic. I've not even looked at a headline. I've not looked at a trading ladder. It's got me big boy pants on, me grown up pants on, me CEO pants on.
Oh, your CEO pants on. Do you want something that might bring a smile to your face?
Oh, please do, mate. Please do. It's not a
So
picture of
Vans
you.
has,
It's not a picture of you with your willy out, is it?
well, it's pretty close.
Oh God.
A Vans is pulled outside. I can see it across the road. The name on the van, I'll let you guess it. You're probably actually going to be pretty close.
Don't say it's Soapy Tip Wagon Capital.
It's Tums and Catering. Apparently they're a limited company.
Oh God. Oh, fantastic.
Right,
There you go.
okay.
Well, do you know what? I'm happy to end the show there. Just end on a
Yeah,
high.
and that's been our faces. Welcome.
Yeah, see you Friday.
See you Friday. Let's crack on with it.
Yeah.
Let's jump into it. So the crypto market update. We'll start with that, and then move on to the news that you may have missed. So Bitcoin currently trading at 113,000, up 0.7% from yesterday's close. This price level sits right on May's prior high, putting it on watch as a potential support zone for traders looking to gauge market direction. Ethereum coming in at $4,200, roughly flat on the day, but down 7% week on week following heavy liquidations that were seen over the weekend. On that, QCP Capital noted that after more than the $1.7 billion in leveraged liquidations, crypto markets have somewhat stabilized with rotational flows favoring Bitcoin. So what does this mean? That means Bitcoin dominance up, Ethereum dominance down. Looking at open interest, demand is sitting at around 120,000 to 125,000 for BTC calls. So we're seeing strength coming in on the call side right now for BTC. October has historically been one of BTC's best performing months, with Powell's remarks plus this week's core PCE print. We may be setting up for a potential Q4 breakout, but this remains to be seen. If we take a look to yesterday's ETF activity, well, that showed us a further weakness following that liquidations that we saw over the weekend. On September 23rd, spot Bitcoin ETFs recorded $104 million in net outflows, driven largely by $75 million leaving Fidelity's ETF, which has the ticker SBTC. Spot Ethereum ETFs fared even worse, with $141 million in total of net outflows across all 9 funds, with no inflows reported. A snapshot into the altcoin sector, or as Bloomberg are now calling it, alt, which I think is actually pretty good. It's a good definition. XRP is alt, so altcoin could be including Ethereum, they're saying. And then alt is anything excluding Ethereum. So, the much
But the
broader altcoin market.
but then do we start having like alts all the way down?
Yeah. Oh, which one's that? Oh.
So I can't work out if Ryan's got his stutter back after a couple of
Yeah.
ciders, or he's actually trying to talk about some kind of index.
Yeah, exactly. So XRP coming in at $2.90. BNB an impressive $1,022. When we first started doing these spaces, Ryan, I believe BNB was trading around $580. So, over 100% gain there. Solana, 210.
Some would argue all down to us, but who am I to say?
Exactly. The popularity of the show. Right. So headlines in crypto. There's going to be a couple from, earlier on Monday, which I've started to read out at the end of the spaces, but I appreciate I rugged pretty heavily on Monday. Hence the shift moving over to podcasts, which is going to be a lot better. So China signals caution. Reuters reported that the CSRC has advised selected brokers to pause RWA tokenization efforts in Hong Kong. The move underlines China's, quote unquote, careful stance, while Hong Kong positions itself as a digital asset hub. There's obviously something that they're not quite happy with at the moment, so they're trying to put a pause on RWA tokenization. Coinbase, announces that Cardless, a co-branded credit card startup, raised $60 million in fresh venture funding. The round will be supporting new programs with Coinbase and Built Rewards, expanding into consumer finance integrations with crypto. Looking across from the UK and the US, we're seeing cooperation efforts deepen. The establishment of the Transatlantic Task Force for Markets of the Future will target cross-border capital raising while exploring alignment on digital asset regulations as both countries roll out updated frameworks. So both the UK and the US are looking to align their stances and frameworks on digital assets in a support of unity there. Looking over to Coinbase Institutional Innovations, Coinbase rolled out the first US futures contract tied to both equities and crypto ETFs. The new Mag 7 Plus crypto equity index products blend the tech leaders with the crypto assets. Some of those top assets and crypto that are in there include the likes of Bitcoin, Ethereum, Solana, and XRP. They're obviously weighted more heavily toward Bitcoin and Ethereum than they are XRP. Kraken introduced Yield-based, a Bitcoin yield protocol by Curve founder, backed by CRV USD credit line, unauthorized by Curve DAO. YB's token sale will run in 2 phases with a planned listing on Kraken. We're seeing an acceleration in the ETF path to listings. The SEC approved generic listing standards for commodity-based trust shares, marking a fast-track path for crypto ETF launches under standardized criteria. Coupled with the recent Fed cuts, this is likely to accelerate institutional flows. Tokens like Solana, XRP, go on. You got something to say?
No, you finish first, because I just got a genuine question for you.
Yeah, no
Rather than me
worries.
just butting in.
So tokens like Solana, XRP, Doge, they're already linked to futures and ETF applications. So they might be in the run-in to benefit first from this generic listing standard.
Right. So we talk a lot on this show rather about reducing barriers to entry, being them significant barriers or just making things more accessible, half the time subconsciously or unconsciously, like QR codes is the great reference we keep using. This seems to me, and please tell me if I'm completely fucking this up, this seems to me that it's reducing the barrier entries to institutional flow and, really kind of breaking down those barriers. Yes, we know that, there's already kind of ways for institutions to get involved in this. But it seems to be, from my point of view, and again, I am a tourist as much as anyone else here, apart from your good self, it does feel like we're breaking down the barriers to entry for other forms of crypto and really kind of freeing up the derivative side of it. What are your thoughts?
Yeah. No, exactly
Right.
that. And it's been really positive so far.
Is that a virtual pat on the head from Cam?
You're like a dog, sat on my lap. Just,
Tickle my
good
belly.
boy.
That's my
You're
belly.
learning.
All right. Move on.
Yeah, oh yeah, no mind. Yeah, no, I'm not going to go down that path. Right. Yeah, you hit the nail on the head there. Accelerating institutional inflows potentially there with the listing of ETFs. Hopefully we can get a little bit more sensible listings in terms of, these alt products, which, aren't necessarily meme coins or meme coin focused or related to NFTs, but that does open the door to tokenized assets as, as all these things do, but toward the more institutional focused rails, which, as we've seen, has benefited greatly, with Bitcoin and with Ethereum, and even these XRP products, which are slowly being turned out along with Solana. They're having a positive impact on not just spot price, but for demand as well. So yeah, let's see how this one goes down. We're seeing a regulatory shift at the SEC. So Bloomberg reported that Chairman Paul Atkins intends to introduce an innovation exemption by year end, removing heavy restrictions on new crypto product launches. Again, similar to what we just mentioned, the SEC has also dropped a handful of enforcement actions from the Gensler era and is building a task force to explore a new framework for digital assets. So yeah, if you're going to be innovating in the crypto space, you might actually be more beneficial going down that path, as there'll be less regulatory burden come year end.
And to be honest, and again, it's not sexy, it's not glamorous, but this, not necessarily everything is. But this is one that, again, what I like about what we're doing here. Yes, you're not getting the people looking for the Lambos, but the important matters such as regulation is critical. And I don't care who you are, but if you're pro crypto, you need to be keeping an eye on these things. Everything's got its place. There's always a place for a degen, but I am quite proud of the fact on this show, especially that we are keeping our heads above the degen nonsense, because this is stuff that really, really does matter to the ecosystem. And it's exactly what you're doing
Absolutely.
with institutional fight, right?
That's the plan. That is the plan.
Yeah, that's right. I should say that is the plan. Then I start talking about soapy tit wank capital, so it all falls off.
You need a balance. That's, trading's all about balances,
True.
Yeah. There we go. Just we're going to touch on stablecoins in derivatives. Acting CFTC Chair Carolina Pham announced a proposal to allow stablecoins to serve as tokenized collateral in the US derivatives markets for the first time. Public feedback on the valuation, settlement, and custody rules is open until October 20th. I wonder if you've got any thoughts, Ryan, on this. Basically this proposal, I'll just repeat it again, just in case I said it a bit too quickly. So allowing stablecoins to serve as So they're proposing to allow stablecoins to serve as tokenized collateral in US derivatives markets.
I suppose it depends what backs the stablecoin. I think something like Tether, potentially. Well, again, all these things. Is Tether backed? I don't know. Yes, I think there's a place for it. Absolutely, if the stablecoin in question is proven to be completely backed itself.
Mm-hmm. So Tether won't be on that listing because it's not compliant under the Genius Act, or it seems to be seemingly the Clarity Act, but Tether's new America-based stablecoin, which I believe is USDA, for
Yes,
obviously America, that would essentially fall under that category once that is, that public. But yeah, you are right. Yeah, it does. That
do you know what I
makes
mean?
a lot of sense.
It's funny. The problem is with this, there's so many variables. The concept, in essence, stable coins, why not? If it's backed, there's no, it's probably the best form of collateralization from crypto assets, but we need to make sure we need to just make sure that those things are backed themselves.
Yeah. Absolutely. So on Tether, Bloomberg reported yesterday that Tether is aiming to raise $15 to $20 billion, for a roughly 3% equity stake, which implies, the Tether, which is a private company, has a valuation near $500 billion, which I believe would actually make it one of the largest private companies in the world. So definitely in that top list.
Yeah, definitely.
Jumping across to some news that we've had today over the last couple of hours. I don't want to say this with too much. What's the word?
Come on, spit it out.
Too much poo-pooing on the idea. But so Trust Wallet is to introduce perpetual trading with over 100 markets and up to 100x leverage via Aster Dex. So we're seeing a huge rise in the popularity of perpetual futures. What we saw over the weekend.
that video where it's
So,
like, almost like esports, but for perps.
yeah, no, that's exactly it. There's a huge rise, but here's something really interesting. If you're listening now and you're like, well, where is the liquidity coming from? Because we've mentioned it before on this space. Is Hyperliquid so far year to date or since May has turned over $1.2 trillion in volume on one DEX, on one perp DEX alone. And there is such a rise. If you take a look at the meme coin sectors, which again, we try to obviously stay on top of it, but you need to watch where the money flows. You're actually seeing a reduction in meme coin activity, meme coin volume trading on Solana and the like, and a sell-off and sell pressure, in Solana's native token, Sol. And you're seeing an uptick in all of these perp deck native stablecoins and the volume that these platforms are seeing as well. So we're obviously seeing a slowdown in degeneracy among the meme coin sector, but a rise on essentially the gambling on futures perps,
Yeah.
which, a lot of these have access to 1000x leverage.
Yeah. No,
Yeah.
exactly that.
So that can kind of answer a few of those questions for you. Obviously some of the realities of perpetual futures. You don't own the underlying asset. It may say, the fees you've got zero fees, but you get nailed on the spreads. Different times of days, those spreads increase. You need to know what you're doing with these products. There's essentially 100% risk, that you could lose everything. So that
No,
you do need
exactly
to keep
that.
that in mind if you're using these tools. In more, not to say positive news, but ECB board member says that a digital euro is unlikely to launch before 2029. So obviously, that is the CBDC that they're planning to launch, the central the bank-backed currency for the euro. And anything else? Stablecoin market cap reached a record high today of $291 billion. It looks like stablecoins are on the rise. Of course, keep in mind now with the payment rails in place and the use cases for this, it's not necessarily going to spill over into the crypto sector in terms of being invested into Bitcoin, being invested into altcoins. There's now particular use cases for these stable coins, which is great to see. And obviously the markets are using them. So we're seeing that hit record highs. Other than that, I believe that's going to be it from me today.
Awesome. Well, Cam, thank you so much as usual. Like I said, hopefully Friday will be pod beam me up. I see what I did there. Nearly. Hopefully we can do that and we can get that seamlessly done, which also increases the commercial ability of this, which means more podcasts, etc., etc. But Cam, thank you so much. Listeners, thank you as always for tuning in, especially all of you guys that are playing it back on the replay.